RBI's December 5th MPC is a high-impact event for Nifty, with the street split between a 25 BPS cut to 5.25% and a status quo at 5.50%. So intraday volatility and whipsaws around 10 to 11 a.m. are very likely tomorrow. RBI policy set up for 5 December. Most economist polls indicate a decent probability that RBI cuts repo by 25 bips% to 5.25%, given CPI near 0.25% and very soft food inflation, though a sizable minority still expects a hold at 5.50% with a neutral stance. Forward guidance is expected to stay growth supportive, with possible downward revision in inflation trajectory and relatively firm GDP outlook. Equity market impact will depend more on the tone on liquidity and future cuts than on the 25 bips itself. Nifty levels for 5 December, spot Nifty is around 26,000, with recent price action showing a bearish candlestick at record highs and a short-term consolidation bias. Very short-term trend is described as mildly down, but poised for potential reversal if resistance breaks. Key zones for 5 December, cash levels, supports, 26,000 and 25,850 as immediate cushions, then 25,700 to 25,450 as deeper downside if policy reaction is risk-off. Resistances, 26,200 first, then around 26,325 as the upper band, where profit booking has recently emerged. PCR and options positioning. Live Nifty options data shows overall PCR sitting in the sub-1 zone intraday, around the 0.6 to 0.7 handle recently, which reflects relatively heavier call writing versus puts, and indicates a cautious to mildly bearish near-term stance from writers. With spot near 26K and immediate supports at 26,000/25,850, any sharp dip on a disappointment from RBI into that band, with PCR dropping further, would be a candidate for intraday short covering. Conversely, a spike above 26,200, with PCR jumping too fast towards 1, could signal over-optimism and a fade trade near 26,325. Intraday trading pointers for 5 December. Time risk. Consider lighter size or wider SL during 9:45 to 11:15, with event-driven spikes and spreads widening around the policy statement and governor's speech. Structure bias. Bullish above sustained 26,200 on 15-minute closing, targeting 26,325 with tight trailing stops. Avoid fresh longs if PCR stretches too quickly. Bearish below 25,850 on strong volume, with room toward 25,700. Aggressive shorts should prefer entry after the first post-policy 15 to 30-minute candle settles. If you share your intended product, weekly versus monthly options, intraday versus positional, a more granular strike-wise plan with preferred PCR OI zones can be mapped out for tomorrow.